All right. Good morning, good day, everyone. I realize I'm the last guy before lunch, so better be interesting. Real quick, my name is Aki. We used to call it actually IBTC after our first product, but we just renamed the company to BitSafe. So under BitSafe, we have three products, IBTC, CBTC, which is a bridged Bitcoin on the Canton network, and BitSafe, which I'll briefly talk about at the end. Just real quick about myself, I'm a second-time venture-backed startup founder. I was a VC in 2011 in Boston and basically became an entrepreneur. I raised over 20 million across the two companies and built a couple of products over the last 14 years of being an entrepreneur. So it's really great to be in the Web3 space. I've been in Web3 for 4 years. Just want to talk to you guys about Bitcoin yield. I don't know if any of you have Bitcoin. Seems pretty popular. I might have a little bit, but when you have some Bitcoin, the big question is like, gee, is there a way to safely earn yield on it? And so that's what we as a company focus on, and we've been building technologies around this for the last 4 years. Just to kind of get into it. Usually, the first thing you learn with Bitcoin, of course, is self-sovereignty, cold storage. Absolutely, those are very key tenets, and we would never suggest that you deprioritize those because the safety of your funds is paramount. So a lot of people, what they continue to do, and it kind of depends on how much Bitcoin you have, but once you start collecting a certain amount, or maybe the price of Bitcoin has gone up, you start to think of I've got this Bitcoin, hopefully in cold storage. Hopefully I'm not keeping it on exchanges, but is there some way I can earn with this? And the thing is that when you're hodling in cold storage, and there's, like I said, we talk to people all the time, and that's what they want to do. There is a cost of that. There's an opportunity cost of what you could be making. And so, it's been our belief all along that given the right technologies and the right, legal and technical kind of layers, that there are ways to safely earn yield on Bitcoin other than just, waiting for the price to go up. So the opportunity cost really starts to matter when you're a large holder. So, if you have a fraction of a Bitcoin, is the risk really worth it? You kind of have to look at different options. You have to spend time on it. It may or may not be worth it. But once you start getting into a certain amount, and we deal with a lot of institutions or asset managers who are there, you do want to think about it. So it isn't dead capital, but you do need to be careful with what you do. So I'm going to give you just kind of a little bit of a history of different approaches people have built. And the approach is kind of aligned to DeFi, CeFi, or institutional. And I'm going to talk about all three. I guess first, before I go into that, I just want to highlight, a lot of people, when you talk about Bitcoin yield, they think, oh, geez, like Celsius, I either lost some coins or, or whatever, obviously FTX or Nexo or whatever. There were a lot of services in 2022 that lost people money. And so if that's the only kind of impression someone has, it's very, very unfortunate because it was, a tremendous loss. But what I want to call out is that these companies, the way that they were designed, they were thrown together. They were not built in a way that really would have been able to survive. And so the experience from these companies is not indicative of what's available today. And that's pretty much the first, or the biggest misconception that we would want to correct. And by the way, we don't offer any services that generate yield, so this is not an advertisement for what we do. This is just what we've seen in the industry. So I'll just kind of walk through some of these. I'll try to, some of it might be too slow or too fast. I don't know, maybe too technical, but I'll just walk through a couple of these. Years ago, and we were not involved in Lightning too much, but I have heard that, well, we have Lightning. I have a Lightning node, but you have to have liquidity in the channels, and so you can earn some sats by providing liquidity in the channels or leasing out your liquidity for other people to put in the channels. That was something like a Bitcoin native DeFi solution proposed years ago. This was a bit, I would say, before our time. Before we came on the scene in 2021, but there are some Lightning-related things. I would say that it never really took off, and the yield was fairly low, and the market, was fairly low, so we didn't really see that take off too much. But then what did really take off was WBTC, which was created a few years ago by Ren, Kyber, and BitGo. And then when WBTC, for those maybe not familiar, are a way to wrap your Bitcoin onto the Ethereum chain or to other chains. And then when WBTC was listed in MakerDAO, now suddenly you could use your Bitcoin to mint DAI, a stablecoin, and borrow against that or use it in other ways. So that was kind of the first Bitcoin-fi use that I believe that had the first notable use that had ever been created. And then you could put WBTC into Aave, and then now you can borrow against it. You could borrow, let's say, stables, and then use the stables in something else. And you have to pay the borrowing fee, but then you can clear quite a bit of profit off of that. But if you're just lending out, the problem that happened was now there's so much WBTC being put into Aave that the supply APY dropped tremendously. So if you're lending out WBTC on Aave, you're getting 30 basis points or 0.3% per year, which is quite low. So that is something you can do today, and you can swap to get WBTC in any exchange, but your yield is going to be pretty low. So then we got into various kind of DeFi options. I guess just to kind of not to jump into any particular one, but I'll give you an example that's been quite popular recently is Babylon. So Babylon launched maybe 2 years ago, and their idea is to use Bitcoin as kind of staking, but restaking. So they're using Bitcoin to secure other proof of stake chains, and they're paying a yield in Baby token, which is their native token. The problem with this is because there's so much Bitcoin, there was about $6 billion in deposits that piled into Babylon, but their technology is new and they don't have a lot of customers. So the yield on Babylon right now is 40 bips, so 0.4% a year. So you're taking some level of smart contract risk to get 40 bips per year, quite low, and you're getting the yield in Baby tokens. So that was, that was not ideal, potentially, or at least we're hearing that's not ideal. Another one that came out recently, quite popular in Asia, is called Solve Protocol. There you're basically, you're sending them your Bitcoin, so they take your Bitcoin in their custody, and then they're using it in various DeFi options. Problem is kind of similar to Celsius Next, so you're sending it to a team, and you have to trust their risk controls, and they're not a regulated or licensed entity. Then there was the Bitcoin L2 wave. This also kind of came out in 2022. So you can bridge your Bitcoin to various chains. It started, I think, with Merlin chain in Asia and BEVM, which is another chain in Asia. BitLayer has been pretty active recently. So Stacks and Rootstock. So actually, I should have started with Rootstock a few years ago, Stacks, etc. But these are what they call Bitcoin L2s. But they're not, because you cannot have a Bitcoin L2 actually right now because the Bitcoin L1 cannot do the fraud proofs. So these are really side chains or various kind of constructions. But basically, if you bridge your Bitcoin into one of these chains, then you will earn some form of emissions in that chain's native token. So on Stacks, you can get Stacks token, etc. So that's interesting too. The percentages vary. You have to then have a position of, what are you going to do with the token? How likely is that token to dump? So the APY is a little bit unclear. It can range from 1% to 10%. Another one actually similar that's quite popular today is CoreDAO, where if you put your Bitcoin in CoreDAO, you get 30 bips per year, so pretty similar to WBTC. But if you also buy core token and stake the core token, now you're getting 5% per year, but then you're just doing core token. So if you don't want exposure to core token, then you're not going to get 5%. And then, so there's all these kind of approaches. The big challenge with DeFi in the Bitcoin sense is there's very limited proper DeFi on Bitcoin in the way that you might have on ETH. So that does kind of limit it. Now we're starting to see, I get into a little bit more relevant or interesting, or things that we find interesting. Plume is interesting. They are an institutional blockchain. They're pretty, I would say, on the newer side. They're building some institutional products. For example, one of their products that I believe they have not launched it yet, but you're going to be able to lend your Bitcoin out to companies like Galaxy that use Bitcoin in their normal operations, and you can get like 3 to 5%, 3 to 4% per year from letting a trading firm kind of borrow your Bitcoin from you. And now we're kind of making a shift to more institutional players where obviously you still are transferring custody of your Bitcoin when you lend it out, but there's some additional kind of assurances, or you can look at kind of what risk controls those companies have set up. So I bring that up because I would be inclined to trust the Galaxy over another company, but obviously it's an individual choice. So then we're getting into the stuff that we look at, and this is kind of where we've been spending our time. And I mentioned at the beginning of the presentation, we have 2 wrap Bitcoin products that just bridge Bitcoin to different chains, but there's no yield in that. We don't offer a yield. It's just a bridge. So that's not super relevant. But the third product, which is what we have been working on, called BitSafe Vaults. This is what we're actually connecting into. So this is where we've been spending our recent time. And basically what you have are hedge funds. And so these hedge funds, they are institutions. They're licensed in various countries like UK or Switzerland or wherever, potentially BVI, British Virgin Islands. And so these funds, this is actually not a new business at all. These funds have been around for decades. For example, 2 Sigma is a fund in New York. They are one of the largest hedge funds. They've been around for a very long time. And so they have a hedge fund spin out called Fortius, or Numis, actually. For some reason, they have 2 brand names. Don't ask me why. But anyway, these guys can make like 8 to 12% per year. Where does the yield come from? Well, it comes from typical hedge fund stuff. So they're using your Bitcoin as collateral, and they're looking for inefficiencies in the market. Things like if 2 tokens are quite similar and there's a discrepancy in price, then they can arb between the 2 and close that gap. So it's pretty quantitative stuff. They will never tell you exactly what strategies they're using because that's their secret sauce. But there are a number of these hedge funds springing up, and we've talked to about 10 or 15 of them, and many of them are quite reputable. They manage hundreds of millions or billions of dollars, and they have necessary kind of risk controls. You can look at their KPMG audits. They use NAV Consulting as their fund manager. They use various custodians like Zodi and Kamainu, and various exchanges. They're keen on counterparty risk on exchange. They're looking at various exchanges for the counterparty risk. So basically, these are pretty cool vehicles. The problem with the hedge funds, 8 to 12% on Bitcoin, especially compared to the other options, is great. But the problem with the hedge funds is it's difficult to onboard to them. So you have to have usually a minimum of at least 1 BTC, which is, I guess, not a big number, but still not everybody has it. And usually they start to get interested when you have 5 BTC or more. And then you have to onboard to them. They have very long onboarding processes, et cetera. So that's this is I would say, a new part of the market, but this is what we've been really focused on. And then now we're getting into the last point. SMAs is sort of a sub-point of this. So if we go back to kind of why did Celsius, et cetera, why did that happen? Well, it's because of the counterparty risk, and I guess I should define that. So if you're sending your Bitcoin to another party, whether it's it's like more like some sort of bridge dynamic where the other party custodies the asset in a multi-sig, or if you're just sending your Bitcoin to another company, like in the case of Solve Protocol, you're just literally sending them your Bitcoin and they hold it. There's a risk there. And so and that's basically the management of that risk is pretty critical. So we're going from like cold storage where you're managing the risk. So in cold storage, you hold the keys, you have to back up the keys and safeguard them. If your house burns down and your keys are on paper, they burn. So you're responsible for that risk. And now, so with Zodia, et cetera, you're moving to separately managed accounts. And this is something that's it's been around in finance for a while. I wish I could say I'm an expert in SMAs, but I'm more of an engineer than a financial builder. But there are a lot of articles, resources on this. And so, for example, Zodia has a product called Zodia Interchange. And so the way this works is you create an account. So as you're onboarding to these hedge funds that offer SMAs, and some of them do, some of them have high, I think probably every fund will offer you an SMA, but some of them have quite high limits because of the way they're structured. So now you're talking, some funds will do it for 5 BTC, other funds will need you to have, 50 or 100 BTC to do an SMA for you. But we're just excited about, this direction things are taking. So the way an SMA would work is, let's say you onboard to a hedge fund, you meet their minimum criteria for capital, and you create a Zodia account in your name. So it's your account, you hold the keys. Obviously, Zodia is a custodian, so they hold one key. Typically, they have a 2 of 3 setup. So there's a custodial side there, but basically it's your account, and you can move the Bitcoin freely, your Bitcoin in and out. It's not you're not transferring it to another party. They're just custodizing it for you, and basically, what the hedge funds can do with these SMAs is they can, if you give them permission, they can use the API keys on your Zodia account or your Zodia Interchange account to trade it on markets. So then they can, what they call, mirror the Bitcoin to various exchanges like Bybit, Binance, OKX, and then they can trade it there. And they basically trade it for you. You see the wins and losses. If you want to pull out your Bitcoin at any time, you can. You don't have to ask them to do it. And so this is what we're really excited about, because it's not self-custody in the traditional form of having a ledger or whatever, but it feels closer to self-custody, but done so in a regulated, licensed, institutional way. Also, these custodians, I should add, often have insurance. So if there's a hack, then you're covered under the insurance policy. So this is what we as a company are really excited about, because now you're seeing, typical financial money managers, people have been doing this job for years or decades, and now you have a construct that feels a little bit more similar to what we think of as self-custody or your keys, your Bitcoin. So this is what we're interested in. And so so this will basically, I kind of spoke through this already, but what these funds are able to do is they're able to do kind of market neutral strategies. So I guess kind of break that down. Some of them are market neutral. That means that you're going to make money no matter where the market goes, if it goes up or down. And some of them are directional, it's going to make more money in a bull market or a bear market. And that kind of depends on your strategy and what the fund is offering. For example, for a market neutral strategy, you can do long one asset, short another. You can be, for example, now I'm going to get this wrong because I'm not a hedge fund guy, but you can go long in Bitcoin in one place and go short at another and profit from the funding, what's called the funding rate, which is the lending rate. This is kind of how Athena makes money, but now you can think of it as applied to Bitcoin. I'm not even going to try to explain mean reversion because I don't know what it is, but these hedge funds will gladly kind of sort of explain it to you. But the advantage of the SMAs is that you keep custody, and that's now very interesting, and then the traders can use your API keys to manage it. So, getting this sort of institutional yield, which is, again, far superior, we've seen, to DeFi yields, it doesn't mean you have to give up control of your Bitcoin. So that's what we've been finding interesting. So basically, I'll just start to recap here. How do you choose the right strategy for getting yield on your Bitcoin? You have to see who holds the keys. Is it a smart contract? Is it some sort of a multi-sig? Is it a team? Are you just sending your Bitcoin to a project team because they said they're going to make you yield? Is it you? Is it a hedge fund, et cetera? How liquid is it? So one thing that I guess I should add for the hedge funds is they often have a redemption process. So when you put your money in, you might have a 30 or 60-day redemption time, and that's just how these financial firms work. And so, if you want a block-by-block liquidity, you're going to want to look at more of a DeFi solution. If you're fine with keeping your money in for a while, that might be a better fit for you. Are the fees transparent? This is pretty important. It's, to me, kind of disappointing when we see some protocols that do a big kind of marketing launch, and then you look at the fees and their expense ratio is egregious. So if there are some protocols that charge you 2% of your entire Bitcoin supply to pull your money out. So sending it in, usually cheap. Pulling it out can be expensive. So you want to look at the fees, and they should be transparent about it. That's their job. Where does the yield come from? Like I kind of briefly characterize it, it's either coming from some kind of black box hedge fund trading thing, or it's coming from some DeFi thing, which is also, these are all kind of new. So you want to research, obviously, where you're putting your money. Is it paid in BTC or tokens? I would say this is a big one, because even assuming there is not a hack, or even assuming that, whatever protocol or chain you move your Bitcoin to, if you're getting paid in their token, like, you might make tokens and everything could be dandy, except then if everyone's doing that, the token dumps. And so we've seen that with, for example, Baby token has taken some big dumps, or Solve token has dumped pretty hard. So if you can't, if the APY is quoted in their token, but then every, whatever day, every week, their token drops, then your APY actually ends up being lower than what you would like. Are you a US person? This is a big one for us when we talk to people, because US people have different regulation or licensure kind of requirements. So for example, none of the products we're building, well, at least the BitSafe Vault product is not available to US people. In the US, you have to be what's called an accredited investor. So there are certain requirements. If you're not US, I guess we're in Germany, so maybe many of you are not, then you have some more latitude. And then it's like, do you understand the strategy? I didn't really get into it, but you can also do options like covered calls, or kind of different options you run yourself. But then you kind of have to be an options trader to understand, what could happen in certain scenarios. So do you understand a strategy on a high level? Can they explain it to you? So yeah, I'll just kind of wrap up here. Our vision, and like I said, it's not really an advertisement. We're building a catalog of these hedge funds at BitSafe's website. It's just a catalog. If you want to talk to any of these hedge funds, you can ping us, or we have an app where you can just indicate your interest, and we'll just literally connect you to a hedge fund and step away. So that's what we're building. We talk to a lot of these Bitcoin hedge funds, and we try to get reference checks. So we try to put in better funds, or funds that have better controls. That said, we're not a registered investment advisor. We're not a fiduciary. We cannot give financial advice. We cannot tell you which fund to pick. We can only show the prospectuses of each fund, and then you can talk to them, and then you can kind of learn more. On our website, or on this app, we want to build kind of a transparent directory. So we want every fund to clearly display the yield, the risks, the method of custody, kind of the things that matter. Again, we don't provide that information. They do. We just want to put it in a standard format. And then now what we are working on, and this is kind of a longer project for us, but quite exciting, is the ability to deposit directly into the fund. And the problem we want to solve is onboarding to these hedge funds is a huge pain in the butt. It's like 80 to 120 pages fund documentation, all this. So we want to have some DeFi rails where you could deposit your wrap BTC directly into the fund in a way that's non-custodial to us. So we never want to get anybody's Bitcoin. So we just want to use smart contracts to deliver your wrap BTC, unwrap it, and put it directly into a fund. This is also called a feeder fund in finance. So that's one thing we're looking to build. And that's it. Yeah, I think there's a future where you can have self-custodied, safe yield that is reliable, that is professional and auditable. So excited to see that. I wish I could say it's available now. It is not. We just have the catalog, but keep following our website, our Twitter, and I would say over the coming months you should expect to see more. So thank you all for your time, and if you have any question about Bitcoin yield, find me after.